episode 57. And you see, usually in this Coffee with Markus, we talk about the markets, we talk about my trading account, we talk about stocks. But today, this is a very special episode. Today, we're going to jump right in because we're going to talk about a tragedy that happened last week that kept me up at night. You see, it's really a true tragedy because a young trader, Alex Kearns, died on Friday, June 12th, after throwing himself in front of a train in his hometown in Naperville in Illinois. And I just want to share this image with you because it's horrible. This is the young trader, Alex. 20 years old. See, Alex had a $20,000 account with Robinhood, one of the brokerages, one of the many brokerages, and he was trading options. On Friday, June 12th, which right now is a little bit over a week ago, his trading platform showed a negative cash balance and a buying power of more than 730,000. Let me just show this to you. So this is the screenshot from Alex's computer or phone, where you see that it says cash negative $730,000. See, Alex was 20 years old, and he thought he could never recover from a loss that he described as almost $1 million. This according to his words, his suicide letter. So he thought his life was over, and so he took his own life. And this is a tragedy. And in this video, my goal in this video is I will show you exactly what happened. I will show you the trade that I believe Alex did. I will show you what went wrong so that you don't make the same mistake. See, the following, what I'm presenting here over the next few minutes is based on many hours of research. And I'm listing all my resources here in the description. Also very important, if you know somebody who is in crisis, right, please call the National Suicide Prevention Lifeline. The number is listed in the description as well, and I'm showing it here on the screen. See, when I heard about this tragedy last week, that a young 20-year-old trader took his life because he thought that he had losses that he could never recover from, I was shocked. I wanted to understand what happened. How could this 20-year-old trader with around $20,000 in his account have a $730,000 negative cash balance? Let me show this to you again. This screenshot was provided by his cousin, Bill Brewster. I have scoured the Twitter account and many sources that I cite below here. Of course, I understand. I understand if you look at this, that you could be devastated. So I want to show you exactly what I think happened. And what I'm presenting to you right now is my personal opinion based on my trading knowledge of many, many years, as well as my extensive research of this tragedy. As I said, I spent countless hours on this. It really kept me awake at night. So Bill Brewster, his cousin, was very active on Twitter. He revealed more information there. So he said that Alex, this trader, was trading bull put spreads. So this means that you're selling a put and you're buying another put as protection. Now, I'll show you in a moment on the charts and on a trading platform exactly how this works. But my first thing was I wanted to find out what options was Alex trading. So we already know that he was trading a bull put spread. And so there's a website. I want to show this to you. It's called Robintrack. Robintrack is a website that shows what stocks Robinhood users have in their accounts. See, the most popular is Ford, GE, AAL. Anyhow, I looked through most of the stocks, and the only one that would make sense for this strategy here is Amazon. So Amazon is 19, and it has $5 strike prices. So I want to show you what I think has happened. So here is the chart of Amazon. This is a daily chart. I marked the day when Alex took his life. So this is when his options expired and he had this massive negative buying power in his account. So I believe, here's what happened, that a few days ago, Alex saw right here that Amazon was making new all-time highs. And when you are putting on a so-called bull put spread, you're expecting a stock to be either neutral at the same level or go higher. And it is very, very typical for many traders to think that if a stock makes a new all-time high or new 52-week high, that it will continue to go higher. So I believe, based on my research, that Alex might have bought or actually sold. So he sold the 2,550 put, and he bought the 2,445 put as protection. Now let me show you. Let me show you exactly what this trade looks like when we go onto the trading platform. See, we were trying right now to mimic something similar that has happened here. So I'm going to the trading platform. Obviously, I cannot put on the same trade that Alex put on. But here we are at Amazon, and we are looking at a trade. We're looking at an options chain with 4 days to expiration. So Amazon right now is trading at 2,700. And again, this is where, going back to what Alex saw on the chart, he might have believed that it will stay above 2,550, and that is the line that I have here. So if we use the current example, it would be like basically saying that Amazon will stay above 2,600 in our example here. So I just want to try to recreate this spread here. So in this case, if we want to say that it stays above, just go back 2,000, maybe 650. So we would sell this put. Okay, so we would sell this and then buy another one as protection. So let me actually show you first what happens if I would only sell the put. You see the buying power. This here, what I'm showing you is a $20,000 account, very similar to Alex's account here. So, but if I wanted to just sell the 2,670 put, I needed at least $100,000 to sell one of these options. Because here is what this does. When I'm selling the put at this strike price, it means that if Amazon goes below my strike price, I have to buy 100 shares of Amazon for each one option that I'm selling. So this is why the broker that I'm using here, Tastyworks, requires me to have at least $99,000, almost $100,000 in my account. However, if I'm, as protection, trying to buy a put that is just one strike price below, take a look at this, the buying power effect that it will have here. Oops, I traded too many. So let me just get rid of this one, the 2,550. Let me just delete this leg. There we go. So now you see the buying power. The money that I need in my account to trade one of these bull put spreads is only $340. And I can make $160 and I would risk $340. So maybe even Alex, I believe that he was trying to make $200, risking $300. Again, that's my belief here. So looking at this to see exactly what's happening here, let me go back to the charts. So I believe he was trying to make $200, risking $300 per one option. And if my math is right here, I believe actually he was risking $500. Sorry, $500. I believe that he was trading 3 options. And I will explain to you of why I believe that he was trading 3 options here. This is based on the numbers that I've seen. Now, as you can see, Amazon on this day, let me just write this down. On this day, AMZN closed at, what did I have here? 2,554.02 cents. So this means that right now, the put that he sold is in trouble. So it is below the put that he sold, so therefore he has to buy Amazon at 2,550. Now let me write this down. For each option that he traded, he would have to buy 100 shares of Amazon for $2,550. So if he was trading 3 options, this means that he would have to buy 300 shares at 2,550. So this brings it up to a total of $765,000 that he needed in order to buy these shares. Now again, Alex thought that he was protected by the 2,445 put, because here's the deal. When we go to a platform, any platform, I mean, Robinhood probably does the same way. And we're taking a look at the analysis. And we see here exactly, okay, he's trying to make $200 and that he's protected, and that all he can lose here is he received exactly $300, right? I mean, so not bad at all. Not bad at all. So it should have actually worked out well. But let's see what happens here. Well, since he got assigned, and this means that the stocks will be in his account on Monday. Because I said, selling a put means that you have to buy the stock for the strike price. So what I believe happened is that the broker, in this case Robinhood, reserved the money for buying the stock. But you see, the stocks are not yet showing up in the account. And this is why Alex suddenly saw in his account, let me bring this up here again, a negative of 730,000. Again, this is based on the math that I did here. So as you can see, it is possible. So he didn't have the money. Obviously, he didn't have enough money to buy these shares. So this is, the broker would have sold the shares on Monday, June 15th. So let's take a look at the chart again. So this is what would have happened. And then Monday morning, the broker would have sold the 300 Amazon shares at the open. And so the price at the open was $2,526. So let's think about it. He bought it for $2,550, and now he can sell it for $2,526. So this means that he has a loss of $25 per one share. So this is the loss. Oops. Let me show my desktop. There we go. Okay. So the loss, $24 per share. And since he has 300 shares, the total loss would be $7,200. Now again, this already is kind of scary because he was actually thinking that he would only risk 500, that this would be his maximum loss here. So it is much more per one option. It is much more than the expected $1,500. So let's talk about it. What happened? What happened? So Alex, who took his life, said in his suicide note, it should have canceled out. And you see, this is a common misconception when you're trading spreads. No, it did not cancel out. Why? Because this was the date of expiration. June 12th, these options expired. So the protection that he had in place expired. So what do you need to do if you see that one of the options, if you're trading a bull put spread, as I believe he did based on the information that I have, and if then you are getting into the money, what do you need to do? Let me write this down here. You need to close the option, because otherwise it can happen that you are getting assigned, and when you are getting assigned, you suddenly have to come up with a lot of money that you might not have. Now again, the broker will not let it happen that your account goes negative for that huge amount that you saw here, the $730,000. But he could have lost possibly $7,000 or $8,000 depending on when he got filled. So the broker will sell the shares right away. But let's go back to the example. So close the option. The price of Amazon on that Friday when the options expired was 2,545, 2,545 and 2. So the value of the of the 2,550 option, so that it has a strike price of 2,550, is around $5. Maybe a little bit more, maybe a little bit less. Well, probably a little bit more here, but let's just say $5. Technically, it's $4.98, but you get the idea. So this means that you have a loss of $5 per share or $500 per one option traded. Now, since he traded 3 options, his loss would have been $1,500. This is when you close out the option. This is why it is so expensive. And you see, this is what I believe happened, is that he didn't close it out, got assigned. Let me see if I can move this here around a little bit, that we can see all of this. Let me just make this a little bit bigger. There we go. So you see, I believe that this happened led to the tragedy that he had a spread. He thought that he was protected, but then it turned out that one of the options expired and the other one that was deep in the money here, that was in the money by $5, he got assigned, and the broker actually started reserving the money because he needs to buy these shares, but then he would have the shares in the account. But this is what led to this unbelievable cash of a negative of minus $730,000. And also, as you can see, the buying power of minus $730,000. Now, Alex saw this and thought he could not recover from this. But let's talk about the important lessons here. And again, if you know anybody who is in crisis, or if you are in crisis, please call the National Suicide Prevention Lifeline. It's here. This is an important thing. But let's talk about the lessons here, and then you could really help everybody here if you shared this video here. I'm not asking for likes because it's tragedy. I don't want you to like this video because that's not the point. I want to show what happened and the important lessons that we can draw from this here. So there's 3 lessons. Number 1, know what you're doing. See, these days, there's many people who make you believe that trading is easy. It is not. I believe that trading can be simple, but it's not that easy. Otherwise, everybody and his grandmother would be doing it. And this is what we see. We see young kids. I mean, my son is 17 years old. In his class, there is many kids who do have accounts with online brokers, the most popular being Robinhood here. And it is very important that you know what you're doing. So I can't stress this enough. Before you start trading and go into the arena, make sure that you have education, education, education. What does it mean? This brings me to lesson number 2. You gotta have a plan. And the plan tells you what to trade, when to enter. Alex got that right. But number 3 is when to exit. And you see, this is one of the big mistakes that too many traders are making. They don't know when and how to exit. You won't believe the amount of emails and comments that I get on the YouTube videos where somebody says, I'm in this trade, I'm upside down, what should I do? And I'm always shocked where I say, how could you enter this trade without exiting it, right? So this is what I see is happening, especially right now, while we are still in this worldwide crisis, in this pandemic, where people lost their jobs and where we also see tremendous opportunities in the markets. So everybody wants to take advantage of it. Everybody wants to be there when the market rebounds. And see, this is when people jump into trading who are not yet educated. So this is why I'm so glad that you're here watching this video. So I don't understand you to expect fully what a bull put option is or what a bull put spread is. And you see, if you don't understand it, don't trade it. But let's talk about the third important lesson here. And the third lesson here is a little bit more technical. And this is for all options traders. Don't get assigned unless you really want to own the stocks. Close out options that are in the money if you don't want to get assigned, because otherwise You wake up the next morning and you have a bunch of shares in your account that you probably cannot afford and don't want to have. So I know it sucks. There's always this hope, right, that traders have, and hope is not a strategy, but there's this hope that maybe on Friday in after hours, the stock bounces back. It gets out of the money. No, when you see that you're close to getting in the money, or when you have options that are in the money and you don't want to get assigned the stock, exit, close it out. Close out. Take your loss if there is a loss. Take your win if there's a win. If you leave a few dollars on the table, so be it. But don't get into a stock that you don't want to own and hope that on Monday it goes up. You see here in this case of Alex, Amazon went against him. It closed on Friday at $2,545 and then opened on Monday $20 lower. Now for Amazon, that's nothing. What's $20 on a $2,500 stock? Nothing. But it is enough to get you in trouble if you have a rather small account. So this is what I wanted to share with you. And I'm sorry if I'm not as uplifting and motivating as I'm usually are, because this really hit me hard. It hit me hard that I had to learn that this trader, I want to bring his picture up here, Alexander E. Kearns from Illinois, took his life because he saw something in his account that scared him shitless. And honestly, I believe it would scare anybody shitless if you don't know what you're doing. And he thought that his life was over, and so he decided to end it, which is a tragedy and should never happen again. So I want to make sure, first of all, if you know anybody, no matter what, it doesn't have to be related to trading, who is in crisis, or if you're in crisis for whatever reason, please do call the National Suicide Prevention Lifeline. It is so important. And secondly, when you are trading, please make sure that you know what you're doing. And please make sure that you do not only know what to trade. Alex knew what to trade. He wanted to trade Amazon. He wanted to trade a bull spread. Do not only know when to enter. Alex knew exactly when to enter. But the third and most important, know when to exit. Have an exit plan. And an exit is either with a profit, yay, or with a loss. Losses are part of the business. All right, hope this helps. Please share this video with as many people as possible so that they know what happened here. And again, this is based on my research and what I think happened here. I don't know it for a fact. All we know is that a young man of 20 years ended his life. He lost his life because he didn't know what happened to him when he saw this massive $730,000 loss that wasn't even a loss. It was just that the broker reserved the money, and it would have been all resolved. He would have probably had a loss of $7,000, $8,000, and yes, that's bad because he was planning on only having a loss of $1,500, right? So make sure that you know what you get into. All right, I want to take a few questions and comments here. So I really appreciate everything, and you see, just if you don't know me yet, I'm Markus Heidkotter. I have a website, rockwelltrading.com, and I have this channel. And usually on this channel, I teach you about the markets. I show you what I personally do. We'll talk about what to expect from the markets. We can still do this here in a few minutes. But I want to focus on this particular example here, on this, what happened. And then we can go back to talking about trades, markets, or we do it tomorrow, right? I mean, or on Wednesday, there's no rush. Because we really should, it's shaking me up. Let me just have a sip of coffee. Okay, so let me just see. There's so many questions and comments, and I really appreciate it. So everybody can hear. Image and sound are out of sync. Seems that we're good. Seems that we're good on YouTube. Okay. We will see. So John is asking, what do you think of JPM, AXP, and BA? See, we can talk about this later. Let's just focus on what helped here. So Mike is sharing that he had a similar thing happen to him on Robinhood with IWM, which is mirroring the Russell 2000. It's an ETF. My bull put spread expired in the money, and my account showed $16,000 negative, or $16,000 on Friday. Yeah, Mike, I don't know what your plan was if you really wanted to get assigned. I always recommend that you close out the trade here. Okay. So Mike continues here and says, on Monday, the trade was settled with both legs of my spread. The actual loss was only around $100. So Robinhood makes it look very bad until settled. See, I don't know if it is necessarily Robinhood. I don't know how other broker platforms are displaying it. It might be very, very similar, because this is how it technically works, right? You're getting assigned, the broker has to reserve the money, and then on Monday everything gets settled. Yeah, but I believe, Mike, that you probably also thought, oh my gosh, what's happening here, right? I mean, negative of 16,000, even though it was only around $100 here. Anyhow, Michael says, I have to watch this again. I'm completely lost. Michael, you know what? This is absolutely fine. There are simpler strategies that you can use than this one. See, the way how I like to trade, for example, I like to use the PowerX Optimizer and the PowerX strategy. So there's the book that I've wrote, where you just buy and sell stocks. You see, Michael, if you're new to trading, that's a great way to start. And if you're new to options, it's great to just get started with buying calls and buying puts. Because when you're buying calls and you're buying puts, the risk of assignment is much lower. There's still risk. By the way, I did a course, Options 101, and we just loaded it into our app. Right now, we're making this course available for free. If the team could give me the link, then I can show it here on the display, or if you can post it there. So if you would like to have a free options course, it's called Options 101. I believe we have 13 videos in this. There will be a link here shortly. I'll ask my team for the link. And then start with this, Michael. It's absolutely fine if at this point say that you're lost here. No worries. So Luz is asking, how is it possible for a person with $20,000 account to have that kind of margin? He didn't. You see, the broker, you have seen it. When I wanted to just sell the put, I needed $100,000 in the account. So if he would have sold the put naked, he would have never been able to do this. But he thought that he had a protective put, and he had until that expired. So this is why it is super important. If he had closed that trade on expiration day, and this is what I keep preaching, and this is what you'll see in the Options 101 course. That's where you see, okay, you got to close out the trade before it gets assigned, unless you want to own the stock. However, this is where he would have had only a loss of $1,500. And that is absolutely reasonable if you have a $20,000 account. Now, I personally like to risk only 2% of the account on any given trade. So therefore, I would only risk $400. But I think if you're young and you want to grow your account aggressively, that $1,500 is still okay. I think it's on the high side, but it is still okay. Richard is asking, can you please explain what you mean by close the option at expiration? Absolutely. You see, whether you're trading stocks or options, you're buying and selling, right? So you're buying and you're selling, and it doesn't matter in what order. So in this case, Alex sold a put. So here's how you close the trade. On expiration, you buy it back. You buy it back. And you buy it back at a profit or at a loss before it expires. Technically, it expires on Saturday. But you see, the last time to trade is on Friday at 3:59 p.m. Eastern time, because after this you can't trade. So you need to do this before. I personally like to close out my options 2 to 3 days before expiration. I like to do it the week off, right? So this is where there's a huge difference. So if you know that they expire on Friday, I like to close them out on Tuesday or Wednesday. But again, there's different option strategies. So if the option strategy requires you to hold the trade for a few days, definitely buy it back, or when you bought it, sell it before it expires. Richard, does this help? Okay. So Jim, yeah, it is a true tragedy. And again, I believe that he was trading Amazon and he was selling puts, but he thought that he was protected because according to his note that he left, he said, it should have canceled out. These were his words. It should have canceled out. No, it wouldn't canceled out, but he was protected. He just needed to close the trade here. Anyhow, so Kurt is asking, please define in the money call and put scenario. I'll be happy to. So let me jump back on the screen here and let me show you a very specific example. Let's go away from Amazon right now. Let's talk about Netflix. Okay. So Netflix is right now trading at 400. There we go. So current price of Netflix is $468. Okay, so this means if you're having call options, any call option with a strike price of less than $468 is in the money. And this is also called ITM. Any call option with a strike price of more than 468 is out of the money. OTM. So this means, let me just show this to you here. If you're getting close to expiration, that's a little bit hard to see. There we go. If you're getting close to expiration and you have an option of a strike price of less than 468, you might get assigned. And so this is where you want to make sure. Now for a put option, let me write this down here. For a put option, it's the other way around. Okay. So this is where I'm copying it here because I'm a little bit lazy, but this way you have all these notes here. So for a put option, any put option with a strike price of more, it's the other way around, then 468 is in the money, and any put option with a strike price of less than 468 is out of the money. So again, I highly recommend that you're getting this Option 101 course. You can watch it on your phone, and it's something new that we are doing. We have had the app for a while, but now we make this available, everything in the app, to make it super easy for you. I just want to bring up the app here. This is what it looks like, to make it super easy for you to consume it wherever you are. So there's a bunch of stuff in the app. There, can you see it? Okay. And there's courses, and there's a free course. However, you need to register. We'll post a link here. I believe it's rockwelltrading.com/101, if I'm correct. Don't quote me. Look at the description here. Anyhow, Kurt, is this answering your question? So this just in a nutshell here. Okay. Now, Robert says, I would like to echo Johnson Jim's comments. There's a big boy game. I don't necessarily want to say that it's a big boy. It means, you see, in the markets, people always think it's bulls versus bears, but it's not. It's the educated versus the uneducated. So keep this in mind. In the markets, right, the educated ones are usually the ones that are making money. The uneducated ones that don't know what they're doing, they usually lose their money. There's this saying, I don't know if it is true, but they say that 90% of traders lose 90% of their account in the first 90 days of trading. Now, I believe that these are the 90% of traders who are just jumping in, get the hot stock tip, think, oh my gosh, I know what I'm doing because they watched a free video, or they attended a webinar, or maybe they subscribed to a newsletter. But that's not how it works. I mean, really take the time to understand what's happening. Get this Options 101 course, or get the book. I mean, I'll be happy to send you this book for free. All I'm asking is that you cover shipping and handling. On Amazon, it costs $25. I'll be happy to ship it to you. Just pay $4.95 shipping and handling. There's a link right here at the very bottom of the description where you can get the book. So it's like 150 pages. And on these 150 pages, you get a good, solid foundation. And when you get the book, do me a favor, read it. Right? Yeah, I don't know how many people are getting a book and then they never read it. Anyhow, so Mark is asking why the broker don't advise the trader that he could lose too much money? Well, because again, the broker, right? So if he did it right, he wouldn't have lost it. He would have lost $7,000, which would have been absolutely fine on a $20,000 account. I mean, not good, but there's no way that he could have lost the $730,000. The only way how he could have lost that is if Amazon over the weekend would have plummeted to zero, which we all know is very unlikely. So I don't want to necessarily blame the broker. See, this where it's a great comment, but there's a difference between margin, buying power, how much money is needed or being reserved when you're trading options. What does it mean when you're trading a bull put spread, or what does it mean when you're trading a credit spread or a debit spread? I think I'll do I do a session on credit spreads and debit spreads, these vertical spreads, because they're very, very popular, and they can be. People always say, "Oh my gosh, with these credit spreads, your risk is limited." Only if you close them. But because when you're stuck in between these strike prices, right? I'll explain this in more detail. But when you're stuck between the strike prices, then exactly what happened to Alex can happen to you, or when somebody exercises it early. So we will talk about it. They are supposedly they have limited risk, but as you can see, you can actually lose more than you thought you would. Okay. Good. So let's see. Madhu says that was a wonderful explanation. You're the best. My goal is here really that you understand what is happening before you commit money to the markets. And Madhu, I mean, I know you. We know each other. You're in the mastermind group, so I know that you're taking it very seriously. And this is why I'm very happy to work with you and everybody else in my mastermind, in my inner circle where I work personally. I mean, Ricardo, Mark, Rossi here. There's quite a few others who are Perry. So good to see you here, Perry. He's in the mastermind. So Jeff is in there. There's quite a few. Malin, you're in the mastermind. So I'm really happy to work with you to get you educated. And then you also have a lifeline. I mean, obviously not a suicide lifeline. I'm not that. But if something goes wrong, call me, right? Text us, email us, and let us know how we can help here. Jim, yeah, need a shot after this. I mean, this is how I felt pretty much since I heard about this. It makes me sick to my stomach because it's a tragedy that could have been avoided. Could have been avoided by also reaching out to the broker and say, hey, well, what the heck is happening here? And I'm pretty sure that the broker would have explained in the way how I do it of what has happened here. Anyhow, good. Okay. And yeah, Kurt, it is exactly. Yeah, you always can call the broker to understand what's happening and what things can be done. Yeah, please. You see, that's what many people also don't understand. They think the broker is against you. That's only true for Forex. For Forex, I want to say 90%, 95% of Forex brokers are trading against you. I'll do a different session on this one because that's also very important. But when you're trading stocks, when you're trading options, when you're trading with a reputable broker in the United States, the broker is helping you. The broker is there to help you, not against you. Yeah. Okay. Good. Oh, by the way, good. Talk about good. We do have finally the good mug. I know that some of you like when I say good when I'm looking at the comments to pull up the next comment here. And so I asked my team to make a good mark. So it has Rockwell Trading on there. It shows on the other side, it shows good. There we go. You've got this. Because I want it to be encouraging. So if you would like to have it, we now have a new store. It's store.rockwelltrading.com. If somebody can post the link. Again, I'm not making anything on these mugs. We're giving them away at cost. But apparently they're quite expensive to produce. It's like $9.50 to produce a mug like this. And then it's another $4 or $5 to ship it. So yes, it is a total of $14, $15 mug. But if you already have this one, trade what you see, not what you think, and you would like to complete your collection with good, feel free to get it in the store. See, they look beautiful also from the other side. Anyhow, so we're planning to do a few more mugs, but this one right now is available in the store. Other mugs are coming shortly. Okay, so let's see. What other questions do we have? Eagle Eyes asking, do you consider stocks for investment or pure trading? I'm confused on this one from day one. Should I buy and go long or just do trading? You see, that is a great question, Eagle Eye. And it's actually two separate things. There are people who are buying and holding. One of the most famous investors is Warren Buffett. Might have heard about him, right? I mean, how long does he hold a stock? 10 years, 20 years, 30 years. So many hedge funds, that's what they do, buy and hold for the long term. As a trader, you have a more short-term outlook. For example, me, I like to hold a trade between 5 and 25 days. That is my sweet spot. And as such, you can take advantage of the small moves in the market. Let me actually show you. Let's go back to Netflix here that we had. You see, if you look at Netflix, see overall, the long-term trend, as you can see, the long-term trend here is up, right? Would you agree? So as a buy and hold investor, you buy Netflix at a certain price. Let's say you bought it at 260. Well, that's what everybody tells you, but it never happens. And then you're holding it all the way up. As a short-term investor, as a short-term trader, so let me get rid of this here. Again, you should get the Options 101 course. I know that we posted the link here. As a short-term trader, Eagle Eye, you can take advantage of these short moves that you have happening all the time. And as a trader, you can play it to the upside and the downside. So which one is better? I personally prefer trading. I feel with trading, I have more control, Eagle Eye. Love this nickname. Think about it this way. If you're driving down the highway in a car, I just drove from Fort Worth back to Austin, and you're going down I-35, 65 miles an hour. What happens if you let go of the steering wheel for just a second? Well, what happens? Nothing, right? I mean, you should always have your hands on the wheel. Important. Don't text, don't talk, and drive. You know the drill. But you see, nothing will happen. And what happens if you let go of the steering wheel for, let's say, 10 seconds? 10, 9, 8, 7, 6. Oh, the car might actually start going into another lane, depending on how your line, how the road is, right? So, but you still have a chance right now to correct. Now, what happens if you let go of the steering wheel and you just decide to now answer emails recklessly? Never do that. Never do that. What happens? You would wreck, right? That's how I feel trading versus investing. Investing for me, it's more like hands off and let's hope that everything works out to the best. And with trading, I feel that I have more control. Eagle Eye, is this helpful? So this is why I prefer trading. I know my profit target. I know my stop loss. I know when to enter. I know when to exit. And that's what I believe is very important there. Okay. Good. Dana said, got my copy and my mug. Good for you. Good. Hope that you're enjoying it. Hope that you're enjoying it. Edward says, please do these classes on credit and debit spreads. Yes, I do believe that we're doing it maybe later this week or next week, because right now, I think it's very important that everybody understands of what's happening. Jody says, thank you for researching and sharing with us. I spent many hours. I dug through a lot of Twitter threads. His cousin, Bill Brewster, was very active. All the resources are listed, all the sources that I have below here. I listened to podcasts. I read countless tweets from him, where also in the beginning, as I understand, he was very angry and was blaming the broker. And then once he also understood what happened here, it's just, that's the worst thing about this. It's a huge misunderstanding. And please, if you know someone in crisis, I can't stress this enough. I've had two close friends who at some point didn't see any other exit than taking their lives. And also there, it could have been prevented. So if you know someone who is depressed, who is in crisis, or if you are in crisis, please call for professional help. Super easy, 800-273-8255. I mean, they're there to help. They're not judging. It doesn't matter what you have done or what you're doing, right? I mean, I believe there's always and out. There's always a possibility. So talk to somebody professional. Don't talk to me. Talk to somebody professional here. Anyhow, good. Okay. Well, I see lots of great questions here. So the most interesting man in the world says, I've been missing out on some good trades by nickel and diming with limit orders to get a better trade entry. Should I just go use market orders from now on? I wouldn't do this, but you see, with limit orders, don't be a dick for a tick. Don't be a dick for a tick. Don't miss a trade just because of $5. If you're expecting to make $1,000 on a trade, right? I mean, don't fret about $5, $10, or even $15. I mean, in proportion, of course, to your stop loss and to your profit target, maybe be a little bit more lenient. A market order, I personally don't use market orders because they are just basically writing a blank check, right? Because when the bid ask is a little bit higher, you can get hosed on this one. You can get hosed, especially when the bid ask is larger than 50 cents. So, but you can always hit the bid or the ask depending on whether you're buying or selling. I did a video on this, what the bid ask is and how you can use limit orders. We'll post a link here to this video. It's called Bid and Ask Explained. Watch this. It might help you and helps you also to avoid the dreaded market order, which is basically the oh shit order. Oh, we need to bleep this out. It's the panic button. So don't use a market order if you can avoid it. So I prefer using limit orders here, but good question. Okay, Brian is asking, the good mug come also left-handed. I believe that all of our mugs come in left-handed and right-handed. I know that for a fact that the trade, what you see, not what you think, comes left-handed, right-handed. Nicole, do we have the other mugs left-handed as well? For those of us who are left-handed, which is not me, I believe we do. If not, we'll make it happen. All right. Well, Kurt is asking, how was the regatta on the weekend? I will let you know in the next Coffee with Markus, because there was an interesting learning lesson there as well. Yes, it came from sailing. It came from regatta management, which surprisingly was very similar to trade management. So I will tell you more about what happened here this weekend when I went with my kids to Fort Worth, to Eagle, I believe it's called Eagle Mountain Lake, where we had a sailing regatta. I'll share some pictures with you. I took some pictures on the phone. I'll share some pictures of my kids and also of me. Hilarious pictures. You're going to love it. So make sure that you're tuning in on Wednesday. So these Coffee with Markus episodes are on Monday, Wednesday, and Friday at 3:30 Eastern Time, 30 minutes before the markets close. If you enjoyed this session here today, please give me a thumbs up and make sure that you're sharing this video, because I think it's an important lesson here. The 3 lessons, again: know what you're doing, have a plan, and don't get assigned unless you want to own the stocks. Have a great rest of the day, and I'll see you on Wednesday. Take care, everybody.